Hi there, Shingirai here again with another update on portfolio performance over the past week. On a relatively risk-on, 1 week basis, we saw 5 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 1 returning 2.25%, down to CBAM 5 returning 1.98%, where we saw both bond and equity markets rallying on the back of some optimism, on the back of some expectations that central banks will begin to cut interest rates sooner than expected, on the basis of a cooling inflation environment. In terms of the week, our top performers were Allianz Continental European Equity, delivering 3.81%. Then Global Thematic from LNG returned 3.78%. Then down to UK Gilts, also very interest rate sensitive, returning, of course, that 3.5 return on the optimism I highlighted earlier from the Bank of England that there would be an expectation of interest rate cuts sooner than previously expected, rather, in the year 2024. We continue to see headwinds from our China equity positions, and that would see Bailey Gifford China being our only position returning negative returns, down -1% on the 1 week basis. But we also saw a bit of weakness there from Fidelity Japan, returning 0.1%, and most recently, the Bank of Japan having their interest rate decision meeting, also leaving their base rate unchanged at 0.1%. And then we also saw that Royal London short-term money market, less interest rate sensitive, only returning 0.11%. Looking on a quarter-to-date basis, CBAM 3 returned 3.08%, down to CBAM 1, up to CBAM 1 V2 rather, returning 4.92%, and that would see also that interest rate sensitive bond market, really, which is heavier allocation in CBAM 1 V2, really influencing the return of the portfolio overall. In terms of top performers on a quarter-to-date basis, Allianz Continental European, again being a star performer there as the growth equity story continues to play out in Europe, as ECB is expected as well to pivot in interest rate hikes, alongside also a similar expectation from the Fed in the United States, which would see the S&P 500 returning 10.44% on the hedged equity share class. And also notably here, we've seen some dollar weakness, with dollar losing about 3.5% quarter to date versus sterling. And then also gilts, as I've highlighted earlier, longer duration rather, fixed income securities returning 7.55% on a quarter to date basis. We continue to see headwinds from our Hypnosis Songs Trust position, which I've been highlighting throughout the course of the year, and that returning a negative 13.84% on a quarter-to-date basis, despite the strong performance we have seen coming over the past couple of weeks, as that pivot I've been referring to really started to play out in the equity and bond markets, alongside alternatives pricing in a sooner-than-expected interest rate cutting cycle in the year 2024. In terms of detractors from performance, again, we also saw Bailey Gifford China and HSBC MSCI China positions down more than 8.9%. And as I've been highlighting through the year, we continue to see those headwinds from the Chinese property developer market, which represents north of 25% of Chinese GDP. But then also we did see this week as well, UK inflation readings coming in lower than expected at 3.9%. US GDP also undershooting at 4.9%, alongside lower jobless claims, really adding to the narrative again that markets will be expecting somewhat of a pivot sooner in the year 2024 from major central banks in the UK, the European area, and also from the United States as well. But we look forward to seeing on Friday UK GDP readings alongside UK retail sales. Finally, this will be our last recording for the year, so wishing yourselves and your friends and family a pleasant Christmas break and also a happy new year in 2024.